Hello, welcome to Baltic World. My name is Crispin. As of now, there is a new embargo imposed on the export of Russian oil to the G7, the EU, and Australia, whereby all of these countries agree not to pay more than $60 a barrel for Russian oil, meaning that if the price for Russian oil goes above that, they must source their oil from elsewhere. Obviously, this gives rise to the question, is this the game-changing initiative that will force Russia to the negotiating table with its economy threatened by this embargo? Or is it purely a toothless tiger virtue signal that will expose the inability of the West to harm Russia's economy and do nothing to shorten the war in Ukraine? Now, before analysing this in depth, I want to acknowledge the extraordinary success in the consensus being achieved across the board. It requires unanimous agreement of all the different players, and they have wildly differing interests. So, for example, the Estonians and the Polish, they argued for the most restrictive, most comprehensive cap possible. They argued that the cap should be made at $35 a barrel, massively lower than the 60 it actually ended up being. Conversely, those at the other end of the spectrum, small countries that were highly dependent on seaborne trade, such as Malta or Cyprus, well, they wanted a much higher cap because the inflationary pressures of high oil prices impact them disproportionately because it covers all the things that they need because of the high cost of transportation. Indeed, the United States itself, arguably the strongest and most persistent supporter of Ukraine's resistance, was among those arguing most firmly for a high oil cap, as much as $70 a barrel. The reason being that the political climate in the United States is hyper-focused on inflation, and there was a high degree of sensitivity to any potential oil shocks. It is therefore to the great credit of Estonia's Prime Minister Kaja Kallas that despite the personal entreaties by the Secretary of Treasury Yellen in the United States, Kallas resolutely refused to accept a price cap of $70 a barrel as being embarrassingly high, and that it would be better off not to have a cap at all at that price because it would simply expose the collective weakness of the West, unwilling to accept costs to defend Ukraine and freedom in Eastern Europe. So while the $60 cap is still extremely high, and I'll get into its many weaknesses in this discussion, it must be acknowledged that the fact that a cap has been imposed at all, despite the many different interests, and that the cap was brought down from the $70 advocated by the US government, is a testament to the commitment of the Europeans and the Baltics in particular to Ukraine's ongoing fight for freedom. If we judge this purely on the headline objective of reducing the oil revenues received by the Russian government and undermining Putin's ability to wage war of aggression in Ukraine, well, it's a total failure. The $60 price cap is well above the current market price for crude oil, which is $52 at the time of recording. So there's a significant amount of leeway between the current price and the actual cap. I mean, it has no immediate effect at all, and Russia can continue to sell at the market price. Secondly, Russia has proven extremely effective at finding new sources for its oil consumption. So the United States and Britain have phased out the imports of Russian oil since the war began. Some European countries, of course, have done so as well. Thus, prior to the invasion, Russia was exporting around 4 million barrels of oil to the Western countries per day. That has reduced by around a quarter, and yet the vast majority of that shortfall has been made up by purchases in China and India. And while the Russian government has incentivized this through small discounts, it still extracts at an estimated $15 a barrel, meaning that any amount above that is profit and revenue for the Russian government to use in its ongoing wars of aggression. And this exposes the vulnerability of attempting to embargo oil specifically. Oil is the single most valuable resource on the entire planet. Everything runs on it. All vehicles, boats, airplanes, shipping, transport, everything that makes our society run relies on oil, not to mention the militaries of the world as well. It's something that countries simply cannot do without. And OPEC, the Organization of Petroleum Exporting Countries, is essentially a cartel. They get together and collude on how much oil will be produced in a given day and at what price will be acceptable for the open market. You'll recall that during the midterm campaign, the Biden administration was left red-faced because they were petitioning the Saudis to increase oil production in the lead up to the midterms in an effort to bring down the price of crude oil, therefore reducing inflation across the board with all those secondary effects that I've talked about. The cost of freight, that means food, products, transport, anything you choose to import, that all becomes cheaper because freight comes down. Well, the Saudis were having none of it. They were enjoying their oil revenues. They basically told Biden to take a hike, and this was leaked to the open press, which was one of the negative news stories leading up to that election, one of which the Democrats still came out remarkably well. Thus, when you've got a resource that absolutely everyone needs, but only a small group of suppliers have, well, it's extremely difficult for any group of countries to exclude a major producer from the open market because there are always others wanting to take up that supply, particularly when they can receive it at a discount. And yet, despite all these obvious weaknesses, I think this has been a worthwhile endeavor, a great triumph, and a great example of what can be achieved if everyone pulls their weight and works together. Because, first of all, the very idea of imposing an oil embargo on a major producer seems unprecedented to me. I mean, individual countries can sanction Venezuela and places like that, but it's extremely rare, particularly in an inflationary concerned environment, for major countries of the world to get together and actually say, no, we are going to impose restrictions on the import of oil from a particular producer. Also, this will undermine Russia's negotiating position with its other customers. They will know that Russia doesn't have any other options. And while we might well condemn China and India for not being better international citizens and doing more to pressure Russia to end this war in Ukraine, it will still benefit economically because they will be able to negotiate even lower prices should the oil price continue to rise overall. That is, if the oil price increases above that $60 cap, well, yes, India and China might pay more for Russian oil, but not that much more because there isn't anywhere else for Russia to turn. And thus, there is a price signal being put into the market saying, okay, if oil is restricted and prices rise, other countries are going to be willing to pay significantly more than that $60 a barrel from other producers, meaning that anything above $60 that India and China pay to Russian oil export is more than Russia could otherwise demand. And thus, while it doesn't have an impact right now, it does send a future price signal to the market, meaning that future investment in Russian oil exploration or Russian expansion is going to be critically undermined because there aren't many other markets. And so while this is not a silver bullet by any means, and Zelensky himself has been deeply critical of it because setting the price cap above the current market price does seem a bit silly on the face of it, combined with the panoply of other measures, the huge array of sanctions, and the fact that oil is being specifically targeted for the first time, this will have an impact, not immediately, but longer term. And as the effects start to snowball for Russia, the pressure to end the war will only increase. Now, Vladimir Putin has said in recent times that he's willing to negotiate an end of the war with President Biden. This is the first time he's ever publicly expressed such overtures. Peskov, his puppet spokesman, said that unless the United States will recognize those territories presently invaded by Russia as part of Russia's territory, negotiations can't proceed. So there's still a massively wide gap between the two positions. Of course, the West, Ukraine, the right-thinking peoples of the world believe that Ukraine needs its sovereignty, it needs its territory, it needs to be liberated, and only after Russia has been pushed out of the territories it has illegally invaded and occupied should peace be negotiated. there is at least an understanding that Putin does want to bring this to an end. And that's a signal that Russia's military reversals, combined with the united, resolute, and long-lasting international response, is having an effect. So this war, of course, is tragic. It's lasting far longer than anyone would want, but it will end with the Ukrainian victory. And this oil embargo measure, yes, it's ineffective, yes, it's toothless, but it is special. And it's yet another thing that Russia could not have imagined when it first launched this war of aggression. So I actually am positive about this. It's difficult to negotiate something like this. And the fact that there is now a price cap is a great step forward. But let me know your thoughts. Am I being too positive about this? Is it sounding a bit like spin? Or do you agree with me that having a cap on the price of oil from Russia, even if it doesn't have an immediate impact on the balance sheet, will have a price signal that will have a lasting effect, at least psychologically, on Russia's government realizing just how isolated they are, and combined with the other things that I've already discussed, will have an impact in bringing this war to a more rapid and more successful conclusion. Leave your thoughts down below. Hit a like on this if you found value in this discussion. You can support us on Contribute, and I'll see you next time. Goodbye.